Hey guys, Landon Smith here with Remax Professionals, and today I'm going to walk you through the process that I like to go through to find a great deal on the market. There's a couple things that I like to do first on the MLS, and first and foremost, I like to create a search, and I'll show you what I'm doing here is create a search in some desirable areas that people like to live in, and I'll add a couple more cities to this list on the south side of the Denver metro area here. And I think the hottest buy right now is single family entry level price point is probably your best purchase because you're going to have a really strong demand on that for years to come. And so, I think you also economists have predicted that we're going to have a resurge of like first time home buyers coming back into the market, buying these types of homes. And so, there's what I do is I search, 500,000 or less, which in some of these areas like Highlands Ranch, that may price everything out. But in areas like Castle Rock, Aurora, Parker, you'll still get some options in there that'll be worth looking at. And so the thing that determines a good rental is typically location number one, and then number two, a close second, is finished square footage. So finished square footage is kind of a big deal. And normally, homes will go for anywhere from $1.25 per square foot finished to all the way up to $2 per square foot finished. And if something's right around like 1,000 square feet, then it'll usually go for about $2 per square foot. If it's more like 1,500 to 2,000 square feet finished, then usually you'll get closer to $1.50 on the dollar for some of those options, maybe even $1.75 in good areas. And so as I'm looking through this search, I'd like to have some good bones too. For single family, what I mean by good bones would be like 3 beds and 2 baths, just because that's a really marketable property that you can sell down the road. And I want to have at least 1 car garage. Okay, so 1 plus attached garage. So that takes us down. There's actually 227 options in these cities with those specs. And so looking at the results here, if I were to whittle this down, I am looking at some of these Castle Rock places because Castle Rock is just such a really good, desirable area for schools. And a lot of people just really, really love it. And so it's the scenery as well. So looking at this one's more of a duplex, like twin type home. And you can see the HOA monthly is $220 per month. So I don't love that. I really want to stick to more single family, and this one probably shouldn't be on the single family search anyways, but sometimes realtors can stretch to get homes in different searches. Obviously that happens a lot. This one right here on 121 Tilbury Ave, it's been on the market for 53 days, $499,000 on price. If you look at the pictures here, this place is gorgeous. Somebody came in and renovated the whole property and, may have flipped it, but look at your location there. You're right next to some hills and some open space, which is beautiful. If I pull open the map, location's the first thing I look at. So I can see they're not backing any busy roads. You've got this nice open space here. If you zoom out, you can see the general area you're just east of. Downtown Castle Rock, Wilcox, Perry Street. And so pretty easy drive into that to connect to I-25. And so not a bad location there. The other thing that I like about this one is they've got 1,548 square feet, which that from a rental standpoint could get you about $2,800 a month, in my opinion. And so if you look at some of the other single family properties, a lot of property managers use hotpads.com to evaluate like what rentals are doing. So if you go to hotpads, you can see what rentals in Castle Rock are doing. And I can say, the type of property that I want and limit it to, single family house there. Okay. Instead of any square footage, I'm going to go less than 2,200, more than 1,200. And I want it to be Castle Rock. Okay. So now I can try to find some direct comps that really will show me what this looks like, right? And so I'm seeing anywhere from 49. These guys might be dreaming there, all the way to this one 3-bed 4-bath at 2,800. And keep in mind the specs on mine. I've got 4 beds, 3 baths, 1,548 square feet, and an attached 2-car garage, and only 55 quarterly HOA. So that's like 17, $18 a month. I love that. That is awesome. So it doesn't take away from your cash flow, which is great. So if I'm looking at hot pads, trying to find 3-bed 4-bath homes in Castle Rock, I'm seeing a lot of that 2,800 range is pretty common, especially if they're nice and updated, maybe even 3,000. This one's 1,900 square feet, so it's a little bit bigger, but I think 2,800 is pretty realistic for what we're looking at here. So if I go back to the property, my next step would be to look at comparables, right? See what other homes have sold around it, and see if there's, if this is a pretty good deal, or if it looks like other homes around it have sold for less or more. So just looking at a quarter mile here, I can see that there's been comps, in the 6s, the high 5s, mid 5s, for similar type homes. This one sold for 514 on Ponderosa, was really similar in size. And if you look at this one, it wasn't completely remodeled. There's a lot of dated features on that. And that's really close by. Nice bath. But, looking through the pictures here, I think this tells me that what I'm seeing is a pretty good deal right now. And you'll see quite a few of those right now, actually, with the soft nature of the market that we're in. We're seeing more and more homeowners get motivated and drop price a little bit so that they can get a buyer right now. And so I like the deal. I like what I see on this one. So what I would do here is I would go run it through a calculator, a mortgage calculator. So if you go to Colorado Mortgage Calculator on Google and you find, I like NerdWallets. I think they just have a lot of ease of use on theirs. So I like to use theirs. But the cool thing is, if I were to type in where rates are at today, let's say 675, kind of that price point, and let's say we got this at 450, our price point is going to be right at that 2,800, and a break even in today's market is a very good rental property, even with 25% down, believe it or not. So at 6.75%, it is very, very difficult to cash flow anything. But this shows you exactly what's, your down payment would be $112,000. Your loan amount would be here, and taxes you can actually just plug from the MLS 4693, and I can put that right in here, 4693. Okay, so just over 1% is the property tax amount. That's just an estimate for homeowners insurance, and then $18 a month on the HOA. So that brings my monthly payment to $280 or $28.38. We know that this could rent for right around $2,750, $2,800. So let's play with a couple things, right? Let's say that in a year interest rates are at 5.5. I can refinance. Look what that does to my payment. All of a sudden I'm paying $400 less per month, and I could fix that payment there. So that's an option. The other thing you could do is you could put more money down, right? If you did that, then your payment goes down. You could also, this is negotiating a price here, right? With $50,000 off of the price right now. They're priced at $499. If I was at $499 full price with 30% down and 5.5% interest, I'm still cash flowing on this place. Obviously, you got to think about if you want to hire a property manager. That's usually around 8 to 10% cost on that. I've got some great ones I can refer you to if you need, but that's something to consider as well. If you want a little more hands-off approach, you may be taking a slight deficit there on this property, unless we were able to negotiate it down, right? So on that negotiation down with 30% down, then we've got some space for a property manager in that deal. So those are all the things that I would coach you through. I've done this a few times for myself, and got some great rentals that have been worth, anywhere from $40,000 to $60,000 per year for me in monthly income, or sorry, in annual income, net, just with appreciation, with tax advantages, with cash flow, and also with depreciation. What you can do over time with that from an accounting standpoint. So make sure to talk to your CPA about all the advantages of owning rental properties too, because what you're seeing here of breaking even or maybe taking a month loss is only the tip of the iceberg. There's more advantages if you were to refi at a lower rate later, or looking at the big picture with all the other implications involved. So that's why a lot of smart investors are doing this now, especially in a softer market, buying now before values continue to climb and it becomes more difficult down the road. So we still have a pretty good rental market in our Colorado market, in the Denver metro area. And it has softened as home buying has softened over the last couple of years a little bit, but it's still, maintaining a pretty good, especially in the first quarter, it's phenomenal. Fourth quarter is tough for rentals. And so right now is a really good time to acquire one and then find your tenant as the year turns and get it rented out for a really good price. So if you have any questions on how to find a deal, or if you want me to start searching for you specifically to find you a good rental property, I'm happy to do that. And the other thing that we look at too are days on market is a big one. So we can search on the MLS based on how many days it's been in the MLS. And that's a great way to find more of a motivated seller who's looking to, sell the property sooner rather than later. This metric right here. So if we look at only homeowners that have been in the MLS for 100 plus days, then, we see there's several options there. And if I want a specific city like Castle Rock, for example, in Colorado, I can look at 123 homes that have been on the market for over 100 days, right? Get to my price point and then figure out if any of these look like they're more motivated than others to sell. And so that can be a great way to do it. And you'll see on a few of these, prices drop dramatically. This one's dropped about 22,000. This one, 10,000. This one, 580 to 523. It's 57,000. That one hasn't dropped. That one's dropped 10. That one's dropped, 32,000. This one's dropped 10. This one's dropped 30, 40. So a lot of these have dropped, and they're motivated sellers that are ready to get a deal done. We don't see that in our market usually. So this is kind of a special time, you guys, to find a rental property. That's why I would act now if you're looking for a rental property in Colorado that can really be a nice investment for you for the next 20, 30 years and help you through retirement or help pay for your kids' college. Plan for the future by buying rental properties. It is the best. And then the other way we can search too is by doing a keyword search. So the way that we do that is by going in and finding public remarks or private remarks section. So if I take days on MLS away, then I can go to public and private remarks and see what the agent talks about, right? Sometimes agents will talk about things like, this home is a fixer-upper, right? And you could find a deal that maybe you're looking for something you want to fix up. So if I put an asterisk and I say fixer-upper and another asterisk to close it out, then I can see all the homes that have that phrase in their public remarks and search that way. You can't normally do this on any other site, that's a third-party site. So that's why you would want to work with a realtor for this type of deal. For example, this home in Cherokee and Inglewood, it's been on the market for 452 days on the MLS and is a fixer-upper. This one been on for $35,000 price drop, been on for 57 days in Lakewood, and it's a single-family home. And you look at the pictures and you can tell it is a fixer-upper. Needs quite a bit of work. So some of these could be a great deal, especially if you're a contractor, if you're handy. I've had clients that wanted to bond with their kids and they have construction backgrounds and they want to, go do a project with their kids and and teach their kids some things about construction and that sort of thing. Great time to do that, to educate your kids and do a flip, on your own. And I can coach you through what the profit margin looks like, what the ARV, the after repair value looks like on these properties to see if you have a margin that would pay you out, so that you can make some money on some of these properties. And, it just depends. You never know with these sellers. I've seen multiple deals this year in 2024 go for 75,000 or more off of the purchase price. And so, we have a strong ability to negotiate for you on your behalf and try to get a great deal to open up that profit margin so that you can, have a great investment that will really help you. So, again, if you're outside of Colorado, moving in, looking for good investment opportunities, or maybe you live here and you have a Colorado home, but you're looking to add to your portfolio of real estate and go buy a second property that you can invest in, possibly fix up to rent out. You could possibly fix it up to sell it. Or the other option is you could fix it up, rent it out, right? Get that rental in place and then refinance it, take the money back out, most of the money back out, and then go do it again and keep that property as a rental. And so that's a great strategy as well. And so if we can help you with any of those strategies and exit plans, we're happy to do that. And myself and the rest of the Dreamsmith team are always happy to help and never too busy. And appreciate you listening today. And hopefully that helped you, understand how to identify a great search. And we'll do more of these in the future to continue to help out for those that are interested. Thanks. Have a great day, and we'll talk to you soon.